The wall of worry. Markets love to trade up on the prospects of deals being done, but that doesn't mean that they actually will end up staying there. In today's video, we talk about why the Federal Reserve's decision of the next 24 hours could be a huge catalyst event, what the Darkpool liquidity and options flow are telling us, and where markets are currently showing signs of cracking. Could it be that the volatility markets are about to explode once again after being oversold? And could signs of people moving back into gold and Bitcoin tell us something about where the flows are heading? In today's video, we'll take a look at stocks, commodities, and cryptos to uncover possibilities of what sneaky Wall Street is up to right now. Guys, don't miss this one. A lot to discuss. Let's get into it right away. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the big data, and of course, the key levels coming your way, along with the Darkpool liquidity flows. But let's kick things off with, of course, Jerome Powell and the Federal Reserve. Over the next 24 hours, we're going to find out whether the Fed is going to make a rate cut in May, and more importantly, the potential fallout from this between Trump and, of course, Powell if he doesn't do it. And according to the latest results from Polymarket anyway, the chances are that we will not see a rate cut. We asked this question over the last 24 hours, and most of you thought no cut, but possibility of maybe some form of Fed put or support. Recently, we've talked about how watching the US 30-year is going to be the most important yield to be looking at this year, as that's where we saw both the Federal Reserve and, of course, the US administration blink when it came to concerns and obviously reversing some of the decisions. Now, currently where we find ourselves is on a 90-day hiatus. And while we don't expect those tariffs to come back, obviously the market is starting to get jittery around this point. We've seen some good news that spiked the market up, which is a potential of trade negotiations between China and the US. But of course, if they fall through, what will markets do? Could we be about to see a huge sell-off in terms of this event? Well, let's take a look firstly at the good news for the market. And one of the good news stories is, of course, the S&P 500 has been on an absolute rip. 9 consecutive days up, obviously now being broken. How rare is this? Well, pretty rare when you take a look at it. But there are some good news stories. Only 2 of the last 23 occurrences actually happened within a bear market. And gains during this streak were generally around 10.2%. In terms of larger than any other 9-day streak. So we've actually had an incredible gain across the board during the May run here of 2025. The bad news is, though, that when you tend to get these massive streaks, you can see here the performance overall on average is actually not that good. And what this could tell us is that we're in one of those kangaroo style markets, up, down, and all around. Possibly a trader's paradise, but for an investor, it can be quite scary. And this really falls into one of the narratives that we'll be talking about today, which is obviously the potential here of a sell-off from this zone and then maybe a resurgence a little bit later on. Could we be seeing this already starting to appear according to funding spreads and obviously what Wall Street is doing rather than what they're saying? Are they actually selling into us as retail traders? Well, we do know one thing, that is that it doesn't look like Wall Street is absolutely ecstatic around these prices, and that retail traders certainly are. According to the latest results here from retail investors, we saw JP Morgan state that they have just seen an all-time record inflow. And we've talked about this in our last couple of videos because it's very pertinent to the current point we find ourselves here in the markets. $40 billion in April injected, a lot of that coming in the form of 3 times levered funds. Now, since the last 24 hours, we've actually seen a couple of things that are interesting. We've had a market that's kind of sat within the same zone, then gapped down, possibly opening up what we call an island reversal. And this is happening at low volume. Now, generally speaking, I think this could be more of a coincidence than anything else, but it is interesting according to TrendSpider that the latest low volumes, the lowest volumes of those months, were triggering the sell events of the previous 2 major lower highs. Now, because we find ourselves at this key level, with this key information coming out, it's going to be a news-driven market, but could we be seeing a break to the downside? Well, certainly earnings doesn't seem to be doing that for us. Earnings overall, if you're an investor, if you're someone that's looking at this stuff, The future may be a little bit more muddy and unclear, but the current earnings, as we expected, very, very good. In fact, AMD came out and they were doing pretty well across the board. We've got a little chart on that later on today's video. But in general, these are the big names for the rest of the week. And just remember, the big key thing here is the expected moves of the market. Now, I saw a few people saying that they bought puts on Palantir and they were confused about why they were up no money, even though the stock fell off a cliff after hours. Well, it's because the options market obviously was already expecting a huge move, and a lot of that is priced into your put. So do remember that when you're trading options, it's very important to understand how they work and what implied volatility is, and obviously how that comes out of a stock after earnings in particular. So you've got to be pretty correct when you're looking at making those types of moves. It's not as easy as just saying, I think it's going to be buy the rumor, sell the fact, and then it falls 10 and you think you're going to be up a lot of money. It really depends on how much implied volatility is in that market. Now, let's take a look at the Darkpool liquidity. As we continue to talk about here, we're seeing large transactions. No real updates over the last 24 hours. I expect quite a lot though over the next video, so make sure to subscribe for that because we are about to see potentially one of the catalyst points. 2:30 p.m. New York time on Wednesday, we will see the press conference with Jerome Powell. Obviously, we know that Trump and Jerome Powell sometimes butt heads, although at the moment it's kind of simmering, and we might be seeing some instability in markets due to that. And what you'll notice is that we have this correlation across the board, whether we're looking at Microsoft with massive transactions after earnings here at a level that has literally been sold, well, we have to assume been sold based on previous price action so many times, whether we look there at the QLD, whether we look at the TQQQ, we do have a lot of transactions starting to appear at this point. And we're looking for even bigger ones and more importantly, a reaction from the markets. At the moment, we're staying in a tight range. Could we break to the upside? Yeah, it's possible. Did we put pressure on the downside over the last 24 hours? Absolutely, we did. And of course, as soon as we hit that downside, we saw a news announcement about China and the US potentially going to some negotiations. It seems always funny when that happens right around those technical levels. It's almost like you're in the Matrix sometimes, yeah? All right, so let's have a look here at what's going on when it comes to the 1998 narrative. A similar market from the point that we were in a tech boom, led that point by, of course, the internet. Now we're in a tech boom led by AI. And what we sometimes see is growth concerns. And arguably, of course, we're in growth concerns with all sorts of other things that are going on. Of course, there's been conflicts that have now started to appear over the last 24 hours, which, obviously could start to get involved in the markets as well. And we also do know that at this point, we are finding ourselves at that level of supply similar to 98, where we saw a doubling bottom. That is a market that pulled back. Now, most importantly, on our technical charts, we have a lot of gaps. 3 gaps in particular we'll look at later on today's video that are all about the S&P 500. So let's take a look here at AMD's earnings. According to App Economy Insights, some pretty decent numbers here. Revenue up 36%, obviously strong off that base. Gross margin 50%, up 3 pp per year on year. And operating margin is 11% up, which is pretty good. So I think that this is really a major kind of announcement, obviously showing signs of bottoming already on the charts. And, the future is obviously the main question mark here for AMD, along with where the profits are actually being squeezed due to increased competition. So for bulls out there, what is something you are going to be looking at, especially if this market does start to sell? Well, of course, one of those is the Zweig breadth thrust. We've talked about this quite a lot. We've looked at some recent pullbacks to very good technical zones, and so far the market's been playing the game. We've had a rally back to supply, and even in a lot of these cases, what we often see is we see a sell-off over the next 1 to 2 weeks, followed by rallies that tend to have very good 12-month statistics. Now, of course, when were they not good? During the previous tariff rounds, or the last major tariff rounds during the 1930s. But by that point, we were already in a recession. So you've got to ask yourself, are we already in a recession? I do have a chart for that I'll share in the next video. So make sure to stay tuned for that. It's a pretty interesting one indeed. Got to do with jobs numbers. Gold to silver ratio, as we've been mentioning, gold is very strong. We've loved gold for the last 2 years. However, it's been a little bit more, I guess you would say, volatile recently, and silver is still technically quite undervalued compared to gold. Now, I did notice over the last kind of hours here that we're starting to get news of the potential of a QE announcement. I haven't been able to confirm that. Maybe if somebody has been able to confirm it, send me the confirmation details. But obviously, it's going around, and I did have a look at it, and I thought, oh, is this real? And then I thought, oh, I don't think it is, because I went to the official sources. So be very, very careful about this Federal Reserve idea that the QE has begun again, and that information's out there. If you can confirm it, send it through. We'll have a look at it. But at this point, I don't have that confirmed. So what we're currently looking at here is a small injection from central banks around the world, but not the beginning of QE yet. Interesting to see what happens over the next 24 hours. S&P 500. Now, this is where things get interesting. Did we just see an island reversal at these peaks? We've got a gap up. We've got two sessions kind of sitting around this resistance supply zone, and then we get a gap down followed by a rally. Now, at the time of this recording, we're back to around that 56.40 zone because of the hopes of a China-US trade deal. But the thing is that we also have all of these gaps left behind. So will we go on to fill those similar to the 98 narrative? I think we may see a catalyst here over the next coming sessions, and it could just be that it joins up with the Federal Reserve 2 to 2:30 p.m. announcement and the fallout potentially from that. The US 500 obviously did come down to that major key level sitting around 55.80. We saw some bouncing. If we go to the smaller time frame charts, you can literally see when that announcement came out. I often wonder, whether some of these things are just absolutely perfectly timed and whether there's just like an algorithm saying, quickly announce something because, it happens right at that perfect zone. But we were trending lower throughout the session. And then, of course, we hit right on that support. Boom. Here comes some news about US-China potential tariff negotiations, and it bounces back up. So for now, we're still stuck within a range. And of course, we're consolidating after what has been an epic run of that 9-day straight up kind of action. What about the options market? Is that helping us? Well, over the last 24 hours, it obviously helped us with the potential put support area. That turned out to be pretty much right where we saw the announcements come through. Now we've got the question mark of what happens if we continue to go up? Well, you'll see the calls seem to be topping at around 57.25. So there are some bullish bets here being made on the session with a massive resistance at 57.25. So if the market goes ballistic over the next 24 hours, that has to be one of the targets that some people will be looking at. And of course, on the bottom end, we've got that 55.75, which is literally the technical zone, a put wall that if broken pushes towards 5,500. So we're starting to get some if this happens, then possibly this happens based on at least the options flow itself. Interesting to see how that updates over the next 24 hours. Of course, we will be looking at it. When it comes to Tesla, it's back in that kind of positive gamma kind of flow level if we get through 300, and we know 300 is the key. Currently, we're trading between 270 and 300. You'll notice 275, 270, suddenly some puts here for this week. And we're in a range-bound market. A break to the upside past 300, I could see markets moving towards that next key technical zone. The potential of 330, 350 becomes open, but for now, stuck in a range. It also, of course, could break to the downside. Nvidia, same thing, 115, 120. We say it almost every day here on the show because it's stuck at the most traded zone. Let's now have a look at the bonds markets. What is going on when it comes to US 30 wise? We got that weird spike coming through earlier this week, 4.95%. Make sure to have that alert set. If that happens, plunge protection team, Fed needs to maybe come in and interject into the markets. Obviously, we know it's a worrying point here. So that is one of the key charts to be watching. Another one is our bonds indicator. Not too many updates there over the last 24 hours. You'll notice here on the daily, the way it kind of looks is just stabilized. Is it the calm before the storm? And the same thing goes with bonds spreads. No update yet here. We'll be obviously watching very closely to see whether that starts to say risk off. Let's now have a look at the US dollar. It continues to struggle with that 20 daily moving average, which has been the resistance the whole way down. And as you guys know, the chances of the inverse head and shoulders are starting to get bleaker until we break through that area. So the bears are in control. They have been for the last couple of sessions. We talked about it in our last video. And yeah, there's actually been an okay short that's been good on the scalps and on the day trades. What about gold? What a run. It actually came all the way up to what I would consider like a resistancy point, which is around that 34.30 kind of area. And it's then sold off that zone. Now, this is a change towards the upside again, Comes to the demand, first demand hit, really nice level, ultimately is changing towards the upside. And if it pulls back down, let's say like a 3,300, it's going to hit that daily 20 again and possibly start to find buyers. So a fib here could be an interesting area. 3,300, certainly a zone we could see it pull back down to. And also silver's been coming along as well, finding that first level of resistance, but again, changing trend towards the upside, small time frames. So hoping for silver to get a nice weekly close. We'll find out what Jerome Powell has to say. And maybe silver can make it finally above 34.50. If it does, wow, that's going to be a huge zone. That could really squeeze some paper. And we'll be watching for that. I'm actually excited just to see some kind of action on silver. It's been a while. Let's move over to US oil. It's stabilizing after we get news of all sorts of potential scarcities coming up. And of course, it's been heavily oversold. Very tough market, the oil market. And of course, refining is different to oil price and all sorts of things that are going on. So just remember that when you're at the pump. Now, overall, $60, this is going to be the big breakout level for the bulls, though I'm still skeptical on this. The problem is we're getting announcements every day, and it makes it very tough for traders to manage their risk, and investors alone. So it still remains our biggest geopolitical tension of the year when it comes to any commodity. I'm always worried about oil. And I never sleep well here in Australia whenever I go to sleep if I'm in those positions, unless I'm risk managing very well. Because as you guys know, bang, OPEC does something. Bang, decision made by some country. Oh my goodness, it gets absolutely wild. Now, Tesla, you can see here, is coiling within a range, and we're still looking for either a break to the upside or downside. But the good news is it's coiling, and what coils do is they often come with explosive moves. Semiconductors versus SPY holding its own, as we suspect. We're not through the problem yet. We're right at this correlation resistance, and it's the same thing on NVIDIA. You can see here overbought action and obviously most traded zones. So again, it's going to be needing a catalyst to really push it any higher. Same thing on the German market. Same thing on, of course, the Chinese market, filling the gap. Nice move there off that little break, moving back up here. And the Chinese market obviously rallied off recent breakouts, but it's now filled some of the gaps. So the thing is that we've just got this correlation that keeps going across the board. 2000 on the Russell 2000, key resistance area we looked for. And of course, the NASDAQ is the same thing. And we basically are seeing here, we'll just get rid of these. Sometimes they've reset themselves, but this key level here of 19,650 that we mentioned in the previous video, market gets down to it, instantly there's something comes out and it's just staying in that range, awaiting some form of catalyst. And I think the catalyst is, of course, and I'm sure many of you guys think it as well, it's either going to be JPOW or it's going to be some type of tariff negotiations not working out or working out, causing a large market move. So of course, this is a news-driven market that will probably break the key resistances either way or supports. Bitcoin also having a bit of a resurgence there over the last 24 hours. Now, I'm wondering whether this is also due to speculation over that Fed balance sheet stuff. Again, haven't been able to prove that. So we'll look at what's going on over the next 24 hours. But Bitcoin is back to the most traded zone. So we are literally trading at, again, correlation resistance ahead of news. It's like the calm before the storm. And the news is, of course, this one here, 2 p.m. New York time, 2:30 p.m. FOMC press conference. That's usually the one that moves markets as Jerome Powell comes out and says all these things. We'll have an update nice and bright and early for that one straight after the market closes. And obviously, hopefully we get some catalysts so that we move out of this trading range. Guys, if you enjoyed today's video, remember to subscribe and smash that like button. If it's your first time here, it's great to have you here. And just remember, in terms of a summary right now, it's the calm before the storm. 9 days up, not exactly a bad read for the rest of the year. It could stabilize this market. Dweig breadth thrust as well, obviously a great bullish sign. The problem is when you move up this quickly, often markets do choose to have a little bit of consolidation afterwards. Are we following 1998? At the moment, it's the most correlated, and you guys know that we do like to put correlation on top. Don't follow any one particular thing. Build a confluent storyline, and right now, we know we're at a key resistance, and that seems to be across the board in almost every asset class. Thanks so much. You have a fantastic day. We'll see you in the next one. Bye for now.